Okay, so we have officially been trading in the bear market territory for the past few days, and in this video I will tell you guys how I'm navigating and finding my way around this bear market being a day trader. If you search online what's the average duration of a bear market, that is approximately 9.6 months. Comparing it to a bull market, the average duration of a bull market is a few years, approximately 3 to 4 years. So that means the bear market duration is very less compared to a bull market duration. But being a day trader, trading in the bear market for the next few months, if we stick to the average duration, is a challenging situation because you need to adjust your strategy to suit the bear market. You must have heard this saying in the trading world that market takes the stairs up and then it takes the elevator down, which is kind of true because if we look at the S&P 500 futures, we are trading right around $3,700 level, and we were around this zone in January 2021. So it took us 1 year to go from 3,700 to a high of approximately 4,800. 1 year from January to December 2021, and from January 2022 to around May or June 2022, it took us 5 to 6 months to give it all back to the market. So that directly means that the moves are very aggressive in a bear market. So the first thing I have done to my trading is to adjust my stop loss and to manage my risk accordingly. Earlier I used to take 30 or maybe 50 contracts sometimes in a bull market. I don't even remember the last time I took 50 contracts in a bear market. The maximum I have taken is approximately 30 contracts, but usually I'm sticking to 5 to 15 or maybe 20 contracts on a really good play when I'm trading options in this bear market. And the reason is because when in a bull market, I was expecting to lose around 5% of my investment. Now this will be dependent on whether you are trading crypto, stocks, options, futures, whatever. But personally, I am an options day trader. So in a bull market, I was losing around 4 to 5% of my investment on one given trade, and I was making around 10 to 15 or maybe 20% on that investment. So my reward to risk ratio was still higher than 2 to 1, but I was expecting to lose around 5% on my loser. Comparing that to the bear market, in bear market these days you can easily lose 8 to 10% of your investment if you're trading options, and sometimes on a good trade you can make 20, 30, 40, 50%, right? So the reward to risk ratio is still there, but your risk is a lot more and your reward is also a lot more comparing it to a bull market. And the same is true if you're trading shares or stocks, because you need to give those stocks wider stop loss to catch a bigger move towards the downside or towards the upside, because the stock market is very volatile at the moment. Volatility is good for day traders, but that means you can't keep very tight stop loss because you will get stopped out a lot in this market. So your goal should be to give it a bit wider stop loss, maybe lower your position sizing, because if the trade goes in your favor, your risk to reward is still there. Your reward will be higher than the risk. That should be your goal, but you need to give that stock a wider stop loss. So now coming to the second point, the first point was to manage your risk and have wider stop losses. The second point is to be open-minded, have trading plans for both upside and downside because of this volatility, because the stocks are giving good moves both towards the upside and towards the downside. This sounds a bit weird because the market has been in a downtrend for the past few months, but if you look at the bigger picture, yes, we are going towards the downside, but the pullbacks are also really good. The green days, if we are getting any green days, the green days are also very aggressive because of this volatility in the market, and that is the exact benefit of being a day trader, because you can trade the market both ways, both towards the upside and towards the downside. So earlier in 2020 and 2021, I would say majority of the plays I was looking at every single day were towards the upside. I was watching this stock towards the upside and that stock towards the upside. But in 2022, when I'm watching a stock, I have my levels to trade it both ways, both towards the upside and towards the downside, depending on how the market is looking on that particular day. To explain this point, I have a very good example of Tesla recently from Friday last week, the last trading day. We are in a downtrend if you look at the daily chart on Tesla for the past few months, but if you look at the 1 minute chart and look at the price action of Friday, let's go back to the opening price action on Friday. We had a very good push towards the upside. So we had a push towards the upside, we pulled back to the VWAP and the moving averages. When we made a new 1 minute high right here, we had a crazy push towards the upside. So this is called the bull flag strategy. We had a bullish move towards the upside right here. followed by a flag pattern, the hold of a level. We bounced off the VWAP with increase in volume, and if you catch this push towards the upside, maybe you enter at 645 and you take your partials at 655 or maybe even 660, because you don't have any reason to exit until 655. We straight had 4 to 5 green candles in a row, and if you are trading options, you can easily make 30 or 40% on that one single trade towards the upside, even though the trend on the daily chart is towards the downside. Now the third point, the most important point, is to journal and review. Take this as a learning lesson, because as I told you guys already, we usually are in a bull market for a few years followed by a bear market that usually lasts for a few months. If you're a trader like me and who started in 2019 or 18, maybe even after 2008, because the last major crash was in 2008, I have seen one bear market, that was the bear market of 2020, that only lasted for 1 month before we kicked in the stimulus and the market made new all-time highs. So I would say this is my first experience trading an official bear market. So what I am doing personally is that I am journaling every single day. I'm journaling every single trade I take every single day, marking my entries and exits, and on the weekends I'm doing an in-depth review, because this experience won't ever come back. So if this bear market lasts for a few weeks, for a few months, or maybe for 1 year or 2 years or whatever, I just want to make sure to make the best use of it, because this is very good for your experience, and the next time this happens, you will be a better trader than you are at the moment. And lastly, now than ever before, it's very important to be part of a trading community of serious traders, or maybe have a few trading buddies or trading friends to bounce off your ideas, because you might be looking at the play towards the downside, but then the other trader might be looking at a trade towards the upside, but the market is giving good moves both towards the upside and downside. And that is the benefit of having a trading community or maybe a trading friend, because that will give you a fresh new perspective of the market. If you want to join our Discord group, our community of serious and supported traders, you can find the link in the description box below. If you guys stayed until the end of this video, that means you loved this video. That's why give this video a thumbs up before you go. Subscribe to my channel if you are new, and hit the bell notifications to learn more about trading. If you guys don't follow me on Instagram, make sure that you follow me there. I post a lot of good day trading content on Instagram as well. The link will be in the description box below. Thank you for watching. I will see you guys in the next video.